Silver has a serious problem after this rate cut. Now, this article on Reuters says why Fed rate cuts matter to the world markets. And yes, everyone is staring at the U.S., watching for the rate cuts rolling out this week. And sure, as silver stackers, we're expecting to get a big bump in silver. But in this video, I'm going to show you that we're in for a big surprise. First, hit that subscribe button, hit that like button. It's so important to get this information out there because a lot of this information is the elephant in the room for silver stacking. It's information that we're not hearing a lot, and it's really important. So, of course, the world market, according to this article, is showing that, yes, people are going to follow the leader. We're going to see other countries following the U.S., just as when the U.S. increases their rates, the world follows. Same thing. We're cutting our rates. Other Western countries are going to follow. But more importantly, we're going to see all of these developing countries watching closely because they're anxious to see if the dollar gets shaken off its pedestal from a rate cut. And history, and according to this article, history shows that no, that's not, in fact, what happens with an initial rate cut. We won't see the dollar impacted that much. In fact, much can remain steady, and that's not what we as silver stackers are waiting for. We're waiting for a big bump in silver. We're waiting for silver to finally follow gold. Look at this. Like here, this is also showing strength support for the dollar. It says traders double down on Fed cut bets, boosting bond markets. So we're going to see strength, and the dichotomy that we have as silver stackers is shown in this chart. Check this out. Again, this is on Reuters, and this shows here that what can actually happen, and this is like going days out, 180 days prior, going up to a year after. And you can see in this chart that it's really interesting. It's really telling of what we could see for silver, because there's two ways this can go. First, as silver stackers, we need to accept and swallow this big pill that what often happens is when we get a rate cut, mortgage rates finally start coming down, and many people are waiting for mortgage rates to drop. They have their nest egg. They're waiting to go in on a home, and they've been waiting for these mortgages to drop. And when those rates drop, you're going to see a nice boost in the housing market. That's the opposite. That's the other tangible asset, right? The option for tangible assets are housing, real estate, or metals. And when people go into metals, they pull away from silver. That's the history of silver. It's the history of gold. So when that happens, that puts downward pressure on the price of silver. We don't want that. And we're already seeing people dumping silver. We were seeing the past weeks, up to a month now, we're seeing people, you're feeling it and I'm feeling it, this frustration with the stagnant silver price. And many people are getting out. They're feeling like silver is not following the pattern it's supposed to follow. Gold is at its all-time high. Silver is supposed to lag and then follow. Silver is lagging for sure. Nobody's arguing about that. It's certainly lagging, and it is not following. Gold is not pulling up silver like it typically does. And this is tough. This is really hard. As you know, if you've been in this game like I have, been stacking silver for years, decades, we want silver to follow the pattern that it follows. And when gold jumps up, keep in mind, along with this, the gold to silver ratio has this wide spread. What are we at? 86 to 1, about 86 to 1. That's a big spread. So even if we want to, this isn't the time to swap out our silver for gold. We have to wait. And really, that's the best bet we can get, because look at this. This chart shows that when we have rate cuts like we're having, and we have an election that we're living through, the results can be some serious uncertainty in the markets in general, which can continue the road we're on, which could lead to a recession. That's what this chart is showing. And now, if that happens, again, this is the dichotomy of a silver stacker. We really don't want recession. Nobody wants to live in an economy that's in recession. But at the same time, that's good for silver. That's always good for metals, because when a recession is in full force, people turn to metals for that safe store of wealth. And that gives upward pressure for the price of silver. So that could be the big bump, that slingshot that pushes silver up to where it really should be. Silver should be close to $40 now, according to the trends of silver and the all-time high that gold is at. We should steadily be where we were back when May when we were in May and silver was in a nice solid mid-30s range, right? $35 range. We should have just dipped a little, corrected, and then come back up, but we're not coming back up. And that's why people are feeling frustrated. That's why it's not a surprise to see. I talk to my local coin shops, my bullion dealers here where I live. And yeah, people are selling. They're not buying. They're selling their silver. They're selling their silver. They're feeling, and I get it, they're feeling like this is a dead end. So when we see these cuts roll out and we see changes in the market, changes in the mortgage rates, changes in the housing market, that could be downward pressure on silver. And at the same time, we have to note that the coming months will really be telling, because this chart shows you that we could be seeing serious recession. And when that recession shows its ugly head, that gives silver that big bump. So that's, again, nobody wants this. Nobody wants a recession. But as silver stackers, we kind of, we're playing the odds in that way. We're hoping, really in a way, we're hoping that we get this boost in price. And it always comes from people looking for that safe store of wealth. Hit that subscribe button, hit that like button. It's so important to get this information out there. I'll see you guys on the next one.